Guys, we're going to look at Discovery. Is this the Discovery Channel, or what is this, Paul?
One of the largest global media providers with over 2 billion cumulative subscribers and over 220 companies. Discovery, TLC, and Animal Planet. Every single time I go home, my dog walker, I turn the TV on, it's always on Animal Planet.
Don't you love it, though? I like seeing animals.
I don't watch Animal Planet.
Well, my kids love it.
Aminal.
I bought Discover.
They also own HGTV and Food Network.
I bought this company in July 2020. I'm up 70%.
Come on.
Absolutely. This is one of the stocks in the Magic Formula Investing by Joel Greenblatt, the little book to beat the market. My child is reading this book now, Paul. And
I saw that.
Yep, he's loving it. So, I bought this in July, and obviously I'm very pleased with a 70% return. So you want to get after Discover?
Let's do it. So, market cap, $17.5 billion. PE, check mark. So it used to be like a 10 PE. You bought it really cheap.
Yeah, almost basically the trough.
Profit margin 11.7, check mark. Here it's about 13%, so still a check mark there.
Any dividends, baby?
No dividends on this company.
Pillar number 3 is revenue growth.
Revenue growth.
Giggity.
No diggity. Oh, wow. 6 to 10.8. Big jump here, probably an acquisition. Check mark there.
How about profit growth, baby?
The good news is, even going back here before the acquisitions, there was still growth. So I like seeing that.
Mm-hmm.
So profit growth over the last 5 years. 1 billion, 2 billion. Tickety check. Look how inconsistent this profit is.
It's all over
$1 billion,
the
$1 billion two, lost 340 million, made 594. So it's very inconsistent.
What do you think about that loss? What happened?
I don't know. We'll find out. But there probably was something here that happened. So you'd probably throw it out. Let me see if I can see right here. Boop. Special income and charges, 1.46 billion. Go find out what that is, kids. That's a big factor. So what I do is I go up to the top and see where I see big differences between lines. So like this, 1.7, no. Boom, 57 million, 1.46. Yep, there's a problem there. So something to look at.
How about pillar number 5 is shares outstanding. We want this going down. Paul, what's wrong?
Going up.
Ain't nobody got time
Going
for
up,
that.
kids. It's really weird. It's like they use their shares outstanding as like a bank account for them. So that's an X there.
How about pillar number 6 is current assets greater than current liabilities?
Current assets are 5.5 billion. Current liabilities, 2.75, check mark. A lot of debt, $21.8 billion in debt.
Scary? That's scary.
I mean, their revenue was what, 10 billion? They have double that in debt. That's a lot.
Free cash flow growth. I want this growing over the past 5 years.
Okay, look at this, guys. Very low capital expenditures relative to their cash from operations. So it does not cost them a lot of money to keep maintaining their business. That is an awesome attribute. Okay, 5 years ago, 1.2 billion. And then recently, 3 billion.
Yeah!
So check mark there, big time.
Great.
1.3, 1.5, 2.4.
The average free cash flow is 1.9, Paul.
Are you sure about that? Yeah, probably. Let's call it 2.
Okay.
Now, the free cash flow is growing a lot, but I don't like the debt, but we shouldn't care about that one. So times 20 equals 40 billion. What's the current market cap?
17 billion.
17 billion.
That's correct. He's stumped, folks. This doesn't happen often. Look at him.
Well, somebody I really like in the value investing world likes this stock a lot.
I mean, your hips are shifted. I see the gears turning.
Now I'm going to look at some options and see what I can do for options here.
While Paul is pulling up options, make sure we tickle that thumbs up. We really appreciate your support. Those who are watching, obviously this takes a lot of work to get this done, and the knowledge we're getting from Paul is very valuable, and all we ask is for a little tickle on that thumbs up. We love you, we love you, we love you. All right, keep going, Paul.
Why did so the last year's free cash flow was, let's go look at the last 12 months. Last 12 months, free cash flow of 3 billion. 6 times free cash flow.
Is that good or bad?
That's really good.
Really good.
Especially with a company that's growing. Let's see their acquisitions over the last few years.
This show has come to a grinding halt.
We'll keep talking then. So guys, look right here. They made one big acquisition right here, $8.5 billion. The rest of them were minor sell-offs. Made a big acquisition here, 1.9. Remember, they have a lot of debt here. They have a lot of debt in this company. So the question is, you have to understand their debt, the covenants. I mean, this might be a good stock to look at. This is definitely a good stock to look at. Just be comfortable with their debt. Their debt is, what was it? 20 billion on 10 billion in revenue. Is that what it was? 22 billion in cash was 5.5. There's no inventory in this company, right? Yeah, so 5.5. Yeah, I mean, listen, guys, I think this needs to be added to our list to write some options on, Mo.
Mm-hmm.
You got it. Look when you got it. Right there. Good for you. You should be up more than... Oh, no, 70% sounds right.
Yeah, 70%.
Yeah, you're right.
Yeah, I mean, I only have like 19 shares. I have $5,000 worth back in the day. But
Great.
yeah, it's up. Well, guys, that was Discovery Channel and all of the channels they own. Checks all around except their shares. They're selling off shares.
Yes, they're increasing their share count.
Increasing their share count, yep.